everybody. This is Toni Turner, and welcome to the market now as of Friday, January 8th at about 2:45 p.m. Eastern. Before we go on, please know that I wish you and yours a very happy, healthy, and prosperous 2021. And now on to the market. The S&P 500 and the NASDAQ scaled to new highs again today as hopes of more economic stimulus to ride out the pandemic-led downturn eclipsed concerns over a significant loss of pace in the labor market recovery. So far today, 6 of the 11 major S&P sectors are rising, with healthcare and consumer discretionary hitting record highs. And on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. Now on Thursday, which was January 7th, yesterday, we can see that the SPY made yet another new all-time closing high at $379.10. Today, Friday, it gapped open, then kind of took a nap, has come down very, very slightly, and but still trading up here near new highs at right now, when I captured this chart, at $378.88. I do note down here that it is trading on fairly low volume. So we do watch new highs on low volume. It makes sense. And the volume thing is simply, if you're going to have a really good party, you want to have a lot of people there, a lot of volume. And if there's not a lot going on, even though the SPY is making a new high, then we want to keep an eye on it because there may not be enough people at that party to sustain it. But anyway, we'll watch it. So again, it's trading today at $378.88. Resistance, we can say, is now at that high of today, right around 380. Support now that we can see down here is at the 20-day moving average, which is now coming in at $370.58. So that's about 37.05 on the S&P 500 itself. And again, the 20-day moving average has acted like a pretty nice trend line here since the end of October. The red line you see, the simple 20-day moving average. It's what we call a short-term, almost a short-term trend line here. Now at the 50-day line, the 50-day simple moving average, we see that's coming in at $361.17. That could provide, and the operative orders could, of course, that could provide a little more support for the SPY right here at 360, 361, should it need to pull back to that level right there. Then we can always move down here and look at this trend line that I drew today. We can call this a major trend line because it's touched 1-2 pivots back here in May, June of 2020, then here in September, then in October. So this can be considered a pretty major trend line here, even though it's a relatively short time period chart-wise. We can see that it's touched all these pivot lows here, and right now is ending up at 340. So that would be about 3,400 on the S&P 500 itself. So quite a bit here of potential support should the SPY need it, should it start to pull back. And then, of course, we have the 200-day moving down average down here at $326.30. Hopefully the SPY doesn't come down to that level. So in the coming week, I'm going to trade what I see. I'm going to trade what I see, not what I think the market will do, because it could start getting a little volatile, a little hectic out there. I'm going to keep an eye on the red line, the 20-day moving average that the SPY has been using for a trend line recently, to see if it can stay above that. And if it can and break to new highs, fantastic. If it cannot, then for sure, if it does start to slide south, please keep track of your protective stops. Okay, let's go on to our next chart. The next chart is a chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our NASDAQ 100 index, a major index in the market. And of course, it has the top holdings of the big momentum stocks like Apple, Amazon, Alphabet, and Facebook. Now, the QQQ made a new intraday high today. If you can see it, it gapped up as well. Made a new all-time intraday high today, so far at $318.45. Now, when I captured this chart today, the Qs were down a little at $316.94. It is now sitting atop. It still is sitting atop its 20-day moving average, the red line, and like the SPY has been doing that since about the end of October, making a nice little run up here. We can see the trend lines here that are moving up. We have pretty good touches here. Certainly, we could even extend this if we wanted to back here into the first part of June. So we've got another pretty good major trend line here with several touches to this trend line and ending up here at about 282. So that could be considered potential support. Of course, we've got potential support at the 50-day at 298.92. We can call that. So we'll call that 299 to 300 right here. And of course, the 20-day moving average is coming in at 309.75. So all along here, if the big momentum stocks start to need a little room to fall down or slide south, they certainly have it here. So we're going to keep an eye on the QQQ in the coming week. The tech stocks, a lot of them have gotten what a lot of people think are pretty overblown here. We will be, of course, starting into fourth quarter earnings season pretty soon. So let's keep an eye on the QQQ. If the big momentum tech stocks start to fall, then it could be that we will get a little bit of a downturn. But hey, maybe, maybe not. I can promise you, though, it's probably going to be an exciting ride for the next, well, certainly through the end of January. Okay, so let's now look at our third chart for the day. I brought up here the Energy Select Sector Spider Fund, the XLE. As you know, this contains energy holdings, energy companies from the oil, natural gas, and oil, natural gas, and I believe a lot of companies like the big ones, like Exxon, like Chevron, they're also doing clean energy as well. So there's kind of a mixture in here. The top holdings of the XLE are Exxon, Chevron, Schlumberger, EOG, and ConocoPhillips. Now, when I captured this chart today, the XLE was trading right here. You can see at $41.18. Now we'll look at the history here in a minute. The all-time high for the XLE, and of course you can't see it on this chart. This only goes back to March of 2020, but the all-time high for the XLE actually came in at $98.57. Guess what? That was in June of 2014, so a little while ago. Now, the XLE more recently did sink to March lows, down to $22.28, of course, or $22.88. Of course, oil had been falling, and then the pandemic kind of really did it in at that time. So then, after it fell to these lows down here, to 22.88, the XLE did a very nice job of moving up pretty quickly, jumping back over its 20-day moving average. Then the 20-day jumped over the 50-day moving average. It made a very nice V-shaped recovery here up to about 45, fell back down in June, made that low there at about 33, 34. Then came back up, fell down, but made a higher low. You see the low in March here. Now you see the higher low that has held so far, and that is down here at about $28. So it made a higher low, a good thing. Then it climbed back up. Actually, $26.98 is correct on that. Then it climbed back up and jumped that back up over its 20-day and its 50-day moving average into November and December. If we see inflation, and I am seeing some signs of that approaching, I am seeing some signs of inflation. If we see that, oil and, of course, the oil companies could climb higher. So again, right now we're looking at the XLE. It's come up. It's over its 50-day, its 200-day. Right now it's perched up above the 20-day moving average. So if into the coming weeks, if the XLE can remain above the green line, and it's coming in now, the 50-day is coming in at $36.70. If the XLE can remain above that, so I think 36.50, 36.70 from right at this moment. If it can stay above that, I'm going to plan here to add some shares to my portfolio. My initial stop is going to be down here at $35.50. That's where I'm going to leave it for a little while and see what this can do. Now, if in the coming week the XLE can climb above and stay above $42, if it can close above that, then I may add shares to my portfolio. So you may, with what we have going on here, you may want to keep an eye on the XLE during the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fish, and many more. And for some more good news right now, just for the next couple of days only, we are offering a 20% discount for each and every one of my online trainings. Just enter what you see here, 20 product, at checkout when you're checking out, and you will get that discount. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online trading programs, simply go to the link on this screen or click the orange button below. And don't forget to enter 20 product at checkout. And now for final thoughts. When I plan my trades, do I behave accordingly and trade my plan? When I plan my trades, do I behave accordingly and trade with my plan? Now look, many of us are good planners. We can pinpoint good entries, protective stops, and our profit targets. We can check out the sector or industry group ETF where our stock resides, and we can add the overall market's evaluation to our research. We can even look at prior trades, and I like to do that. That's always a good idea. So we can recognize when we did the right thing and when we made mistakes, and that's what you want to keep a journal on that if you can. If we want to reach our financial goals, however, if we want to become consistently winning traders, we need to remember that our behavior has to reflect our trading plans. We can plan from now to eternity, but if we're not careful, in volatile markets especially, we can tend to get off course. Now, you and I know that we humans gravitate toward pleasure and we gravitate away from pain. So when we plan a trade, we might enter it and we might watch it become initially profitable, and that's a lot of fun. And then maybe something happens to the market, and maybe that trade turns against us because of a broad market downturn. And then at that point, we become confused and fearful. We might ditch our plan and react, selling into the downturn too fast, or even ignore our stop and just don't do anything. Those can be our worst decisions because they weren't planned with any forethought. They weren't planned with any forethought. If you have your trading plan in front of you and it's well thought out and it's a good plan, 9 times out of 10, you're better off to follow it. So let's strive to establish plans for each trade before you enter, and then line up your behavior and trade your plan. If your plans need to be tweaked, please do that before you enter another trade. So, It all means when we match our behavior to our plans, and we not only plan our trades, but then we trade our plans, we are on one of the very best paths to trading success. Finally, if you'd like to become a more successful trader, check out my trader training programs. As you know, they are on sale for the next 2 days for a 20% discount. Just enter the discount code product at checkout. To see all of my online training programs and get your discount, simply go to the link on this screen right here or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.